Ethereum has gone under 2,000 and is hovering. But we projected this months ago and it's just panning out as anticipated. So today I'm going to show you and talk about ABC zigzags. It's one of the most common corrective patterns. If you can see them in advance, you can read the market like a pro. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So Ethereum, we did a video on Ethereum. I think this was on April 16th. Is Ethereum about to tank? It's time to prepare your profit or your portfolio for a massive crash, right? And there was a reason for that statement in that title on, you say April 16th? April 16th. What was the reason? That's what we're going to focus on today, because not only with Ethereum, but with all cryptos, we're going to notice when there's a correction, it normally happens in 3 legs. First leg, we call it an A. Second leg, call it B. And you should always anticipate a third leg, right? Called a wave C, right? Or a wave C. The third leg, a wave C. Now, when we're looking at Ethereum, if I just now go into Ethereum, check this out, right? Just textbook. It's forming that third leg. Do you see the power of this? So one of the things that I want to just show you is I've got an Elliot wave course, Elliot wave and Fibonacci, but Elliot wave. And in lesson 6, we talk about the 4 types of ABC corrections. And the most common is actually called an ABC zigzag. That's what we seem to be seeing at the moment. And I just want to emphasize this. So it's not rocket science, but it does take practice to spot these. When the market's finishing a 5th wave structure, so this is the 5th wave structure, we should always anticipate an ABC correction. And that's what we're looking at with Ethereum. By the way, if you want to learn how to do Elliot waves and the real key rules and these ABC structures, take my free Elliot wave and Fibonacci masterclass. Is in the link below. You'll literally get direct access, free Elliot wave Fibonacci masterclass. Click the link and it will take you to this page, and it's video on demand. So you literally get access to my masterclass straight away. So now let's just go back to Ethereum. So let's just zoom out for a second, and you don't need to get too anal about this, but we're talking about 2017. We got this nice move to the upside, hits $1,000 thereabouts, big correction, and then we've hit what looks like a wave 3. Look at this nice bullish move to the upside from, when was the date here? The date here was March 2020 to around May 2021, like a year ago. And then we've been in this corrective structure for a little while. This was a wave 4. We had a final wave 5, what looked like to be a wave 5. And now we were anticipating a nice ABC correction. The first leg to the downside, we're referring to an A. This second leg to the upside, ABC of a B. And now we're in this part, is what we're going to focus on. Excuse me. This end of a correction, this part over here. Right? Hopefully that makes sense. Let's just get rid of these, get rid of that. Okay, fine. All right, so now when we're looking at this, I'm on a daily chart, we're using TradingView. What we want to look at is a couple of things. We've already got these 2 lines over here. These 2 lines down here. Well, basically, we've measured this and had some Fibonacci projections down here. And this is the 62% and 100%. And this is the typical range that we should anticipate a wave C to correct and finish. Just want to double check something. Yeah, that's all fine. All right, we also want to do something called an external retracement. I just want to double check a couple of things. Yeah, that's fine. We can do an external retracement. Over here, this is a typical end of a wave C. There's 1.618. We're going to be aware of that. That means this is more highly probable up here, this zone over here. I'm also going to measure just how long did it take for this wave A to form. And we're just going to project that forward. And we go, okay, so this will be the typical time, which will be around the 17th of June. So we might have not finished the correction with Ethereum, but we're in that zone now. We're in that zone that we can really, really pay attention to. We're going to just do one other thing here as well, is I want to do a retracement. A retracement is one of the most powerful, it's one of the most basic, but it's one of the most powerful, especially when we're looking at a correction. I'm just going to do it like this so we can get it as accurate as possible. So what we're going to do, this is a macro correction and retracement. We're just going to take this low over here. If I can get this, that will do. And this over here. There's three ratios that we want to be aware of. The three ratios are 50%, 62%, and 78.6%. Right? So I actually cover all of this in my masterclass. So if you're not familiar with what I just did there, I cover it step by step in the masterclass in itself. The main thing that we want to be aware of is these three lines, this here, and this down here are the three main ratios, typical ratios for a whole wave 2. This is what we call a wave 2, ABC of a wave 2. So because this one's been surpassed already, we tagged it when we hit the level 8. That's done. So what we have is we've got another more extreme zone down here. So what will typically happen is if we break this zone over here, the price will typically get down to the next zone, right? So we're talking about extreme, right? This is talking about, potentially 1100 on Ethereum. I'm not saying that's likely, but possible. So let's just now look at a couple of other factors. Let's look at the weekly momentum. I'm just going to dive into my top left-hand corner chart. That's where I keep my weekly information. Just want to double check a couple of things. Yeah, we'll use the top one. So what I'm basically looking at over here is the momentum of Ethereum on a larger degree time frame. The larger degree time frame is the weekly. And when the red and the blue line are below this black line, that's a term called oversold, meaning that the downside should be coming towards an end, so the downside should be limited. And then when we coincide that with a macro picture of what we're looking at here, let me just draw it like this, of this ABC correction, what this really is, if you're familiar with the basics of Elliot wave, is it looks like that this is a wave 1. Okay. And then down here is potentially forming a wave 2. So what does that mean? All right, great. What does that mean though? What's likely to occur on the longer term? So let's stay focused on the macro picture. Let's not get too hung up on the smaller degree stuff. Let's just go, okay, if this is the case, what typically occurs? Now, part of the problem here is we've got so much data on here, 2017, so far back here. I'm just going to need to draw it like this. I'll do it in two parts. This move to the upside is referred to as a wave 1. And then this move to the downside, where it looks like we're forming and completing a wave 2. If that's the case with Ethereum, well, guess what comes next? It's a wave 3. A wave 3. And wave 3s tend to be the most impulsive. Now, within this wave 1 structure, this was the wave 3. You can see how impulsive it was. Look at the power of the buying before we had the correction. And the wave 5 don't tend to be as strong as wave 3s. This is a powerful wave 3. But now the markets are always contracting and expanding. So we're getting ready, it looks like, for the next expansive cycle, which ties in with, adoption and, Ethereum and blockchain and decentralized applications, smart contracts, how this all kind of coming together. So just purely from a technical standpoint, what we're going to do is going to do a projection into the future. I'm just going to make our life easier. I'm just going to draw a line here so we know where the low is, because it's sometimes, it's a bit confusing for you to see when I'm zooming in and zooming out of the chart so much. I'm just going to keep it like this. Okay, so what we're going to do here, I'm going to get rid of these. Get rid of these lines again. Yeah, that's fine. All right, so we're going to make a little assumption. It's going to say, look, if the correction finishes here, could finish down here, could be even lower. But let's just say the correction finishes here. What is the likely, highly probable outcome for Ethereum in the second half of 2022? Second half of 2022. So we're not talking about tomorrow, we're talking about second half of 2022. Well, most often, if I just go back to my Elliot wave course, where is it? Here we go. It's this one here. If I just go back a step, I'm just going to go back 2 steps actually. In the course, if you take my Elliot free Elliot Fibonacci Masterclass, you get an opportunity to buy my course. It's not a huge discount still. We kept the discount going, but we include, it's 97 pounds, it's cheap as chips. You include Fibonacci ratios. And what we're going to look at over here is end of wave 3. End of wave 3, this goes into I think it's the intermediate section. Or is it the advanced? No, it's the advanced section. There you go, end of wave 3. Lesson 16, price extensions for wave 3. Right, we're just going to click on that. Now, the 2 ratios that we're going to look at is 1.618 and 2.618. But I'm trying to show you that here's the theory. This is what we're going to do. I won't go into too much detail here, other than the fact that most wave 3s are 162% of wave 1s. Right, that's what we're going to basically do now. And then there's another ratio that's pretty important as well. So now we go, okay, if the wave 1 on this macro, this is all of Ethereum's life cycle, its absolute low to its absolute high, that's wave 1, right? So when we're looking at this, that's what we're talking about, this wave 1. Now we're going to look at what is wave 3 likely to do. Well, if wave 3, if I can just use this tool over here, we're just going to measure the beginning to the all-time high of around just under 5,000, projected from, I'm just choosing 1,600. It could be lower, it could be higher, but thereabouts, just to give us some indicative numbers, indicative feel of what's likely to be the case. And then the next expansion cycle, from a psychological mood, buying and selling behavior, the mass herd psychology, is 1.618, which is 9,400, to 2.618, which is like an overextension wave 3, is 14,200, right? That's, I'm just ignoring the noise, ignoring the news, ignoring the FUD, the fear, uncertainty, and doubt, all the rest. Yes, the markets are absolutely down, but it's nothing surprising. If you look at the past videos that we've done, like literally this one here was on April 16th. I was like, look, guys, we're expecting a next leg to the downside. It couldn't have been any clearer. And guess what? We got that leg to the downside. But after a 3-wave correction to the downside, more often than not, high probability, you'll get a continuation of the former trend. What's the former trend? Well, the former trend is this. We get a continuation. What's the continuation? We're talking about 1.618 to 2.618 in this region. We don't need to get too anal on anything else other than that the likelihood the price is going to reach that zone at some point, more than likely second half of 2022, maybe by September, October, November, December. If we look at this kind of how impulsive this was, well, there's going to be a new market, new buyers and more buyers over here. That's more than likely. Anything else that I want to cover with you? No. We need confirmation. The confirmation would be a break above this high. If the price breaks above this swing high, this will be the major confirmation that this low will hold. And then, especially if we break above this high, then we're on to all-time new highs. And this is the typical next zone that you should be aware of. So if you like today's content, today was detailed on Ethereum. Like, subscribe, hit the bell notification. Don't waste no time. Take the free Elliot Wave and Fibonacci Masterclass. I cover all of this with you, so you are 2 steps ahead of the market, as opposed to what most people are, which is 2 steps behind, and they are victims to the news. So people sell at the wrong time and buy at the wrong time. People buy at the top and sell at the bottom. We want to get 2 steps ahead, so we do the reverse. We buy at the bottom, which is what it's looking like now. We're getting towards what looks like a bottom, like a wave 2, and then sell at the top. Next top, 9,000 to 14,000. But we're not talking about tomorrow. We're talking about 6 months, 12 months, that kind of range. So let's finish on a quote. This is a poignant one. I'm going to go with chapter 8 again. Chapter 8. It's just, but it's so repetition is the mother of all skills. So we want to kind of drill these home. Henry Ford, it has been my observation that most people get ahead during the time that others waste. So during this FUD, the fear, uncertainty, and doubt, during all this negative news and everything else, and there's some of it's real, like we saw Terra Luna, jeez, okay, that's, wow, wow, it's just went from $100 down to like less than 10 cents, less than 5 cents, less than 1 cent. Jeez, okay, so that is what it is. But a lot of the other news, it's just speculations, opinions rather than facts. What we can do with objective information like the price action, pattern, momentum, and price, we get real clear information. So if you're going to learn how to do the Elliot waves, you'll be 2 steps ahead. And during this time that people are wasting, crying, moaning, they're not getting ready for the next cycle. They think it's over. The fat lady is not singing. No. Can you hear her? I can't hear her. Okay, your portfolio might be screaming, but it's not singing. Right. Wait for the second half of 2022, but prepare yourselves now. And again, like Henry Ford said, it's been my observation that most people get ahead during the time that others waste. So be that person that gets ahead during the time that others are wasting. All right, like, subscribe, hit the bell notification, and I'll see you soon.